Oh man, we're back again this week. So much fucking shit going on, so we thought I might as well do another one, talk a little bit about markets, see what the fuck is going on. Man, same as the last one. I think it's super. Everybody is just like trying to figure out what is going on. Like the people I talk to, everybody's like, yeah, our base scenario is it's going to be resolved soon. But I think everybody was expecting that this whole thing is maybe going to be like a 1, 2, maybe 3 weeks thing. But now it could be resolved tomorrow. Iran says, okay, ceasefire 1 month, and then afterwards there's a peace deal. Or it could say, be like, yeah, no one will keep it going. So nobody has any clue. But in that all that chaos, we thought, all right, let's do another one. Let's talk a little bit about what Trump is saying about how you can trade this. Yeah, so what's going on?
Mhm. I don't know, man. I'm doing good, but I'm doing also stuff. It's very tough because every day new theme, as you said, every day new market regime, dollar up,
Mm,
dollar down, equities up, equities down. So we will try to filter out the noise today, maybe. Um, just map out the best outcome that we believe or that we individually believe what could be the best and how to position the best or how I am positioning myself going forward given the current situation. But it's, oh man, it feels like March 2025 and April 2025 all over again.
yeah, yeah.
And
Like it's really like it was the same thing with the tariffs. You think about it, you try to assess the situation, and then one post, one thing, the whole situation, everything got turned on its head. And like yeah, people are saying that's Trump's strategy, but to me, I told you that yesterday. To me, it feels more like Trump is thinking if he doesn't know what he's doing, then nobody can know what he's doing, and nobody can predict what he's doing. So
to be
that's
honest, I have been thinking about this now, like since you told me this yesterday, I've been thinking about it. It makes sense.
I
And
mean,
then I tried to build on it. And here's what I came out with. So basically, we know Trump. If you have been trading uh, his first year after inauguration, you know how he thinks, how he handles business. He usually likes to escalate before de-escalate, and then de-escalate before he escalates. So it's a cycle, you
mm,
know, and he moves in that cycle. So basically, if we're gonna take the tariff playbook, the same psychology, and apply it to the current situation right now, we'll come up with uh, the same scenario as 2025, and we
so
will
yeah,
touch deeper on it. So
yeah.
if you remember, back, he was like, he started with Canada back in 2025. He started hating on the previous prime minister,
The governor of Canada.
the governor. So I forgot his name, man. He was hated on from everyone because of the woke liberal
Yeah.
policies. And then we saw him multiple times escalate and then tackle, escalate and then tackle. And he moved from Canada toward Mexico, and he started also escalating and then tackling and then escalating and tackling. The market started flipping everywhere.
Mm,
Equities down, bonds up, bonds down, dollar up. Nobody knows what's going on. Oil breaking down into March OPEX. And then after March OPEX, once these Vanna and Charm flows are gone, uh, we saw the first week of April with the Liberation Day, this quick crash that happened.
mm,
And if you have been really paying attention to markets, even the sector rotation, the beneath the surface vol conditions told you back in the days, listen, it's getting tough. And we could have the possibility for a tail event. And I remember it we were at your place talking about markets, and we had a negative PMI print in February 2025. It was a negative PMI print, which started the entire narrative of a growth scare,
Mm-hmm.
which start then we saw the market building up pressure, and a lot of people starts hedging, a lot of rotation taking place. XLY, XLP, for example, started to position for defensive rotation. XLU outperformed the S&P, and then all of a sudden, Liberation Days came and the market cracked. And
Mm-hmm.
if you look at it from the top in February toward March OPEX, market corrected around 10, 11%.
Mm-hmm.
And then after Liberation Day, we crashed by another 10%. So the first half of the move happened based on volatility conditions, based on growth scare, based on repositioning that's taken place in market. So we had a dispersion, the same dispersion we had this year coming into the year.
Like the labor market worsening, the growth like
Not the labor
coming
market,
down.
the relative performance of stocks.
Yeah.
So
Like the cause for it, the whole like sentiment change. That okay,
exactly,
the economy is slowing, therefore there's a lot of rotation going on.
exactly. So we saw the a small part of a dispersion, the same we saw in 2026 this year, taking place back in March, April, February, April, yeah, January in 2025. And this dispersion was a shadow dispersion. Nobody talked about it because we had the AI game continuing to perform. So we
Mm-hmm.
had the S&P 500 breaking into new all-time highs. We had Bitcoin breaking into new all-time highs because we had rising liquidity. So nobody paid attention to the dispersion that's taken place beneath the surface.
Mm-hmm.
When this is the reason why everyone got caught. Moving into 2026, the same conditions applies again. The only difference right now is that we have a falling liquidity, credit problems, and as you mentioned, weakening job market.
Mm-hmm.
You see?
And now
So,
inflation.
and now inflation is coming.
Now
So
Trump fucked
basically,
himself.
yeah, he fucked himself.
Yeah.
So looking at it, if we look at the market from, if you go only look at the chart and compare October 10th, 2024 toward March OPEX 2025, it was a sideways market. And then all of a
Mm.
sudden we corrected 10%, broke the 200 days moving average, and it broke down another 10%. This year, the setup looks similar. October 10th, 2025, where Trump tweeted about China, if you remember, and everything broke down, cryptos broke down, everything shit down the bed, toward where the market topped into March OPEX, we are also down about 7% from peak to bottom. And we are right now below the 200 days moving average.
Yeah.
So the setup is looking the same. Not only on the chart, if you dive into it, the volatility signals are also the same. Back in the 2025 episode, we had volatility going from a high vol ranging into high vol trending, which means the VIX trend is currently up.
Mm-hmm.
We don't care about the VIX levels, we care about the direction of the VIX. So is the VIX rising or is it falling? This is what matters for market makers. This is what matters for delta, gamma, VANA, and charm flows because of book hedging, because of dynamic hedging, because
Mechanicals.
of
Yeah.
mechanicals. Exactly. So right now we moved from high vol ranging market. Our quantitative models triggered another signal, which is high vol trending market, which means volatility trend is going up. And we don't look only at the VIX, we look at the GVZ, which is the gold vol, look at the OVX, which is oil vol,
Mm.
we look at EM volatility, emerging markets, we look at FX volatility. So we try to look cross asset volatility. And then we try to come up with a regime classifier. It tells us, listen, volatility across asset classes is rising right now. and we're moving into a higher vol trending market.
The vol
When we
trending
talk about
higher.
exactly when we talk about trend, we talk about vol trend, not
Yeah.
only equities or the underlying asset. So it's not looking good.
Yeah,
Moving forward,
the
we
setup is it's super similar to 2025, only that now under the hood it's looking worse. Like
exactly.
you've been telling me all the time about liquidity, and it's been fine until now, and now it's not fine anymore. We got credit stuff coming in. You have to think about, okay, how much is the fallout of that? But if it there's a connection to the financials, that's going to be have a like having a connection to the rest of the economy. So yeah, it's
Like
looking
it's
good.
also I don't think people are looking at credit because if you look at credit spreads, we are trading now at 300 pips again. We are moving while the equities are moving over the last 3 days with the ceasefire news. So
Mhm.
if credit spreads are rising with equity markets rising, this is telling you something. Even though we had good news where you would seem to think that credit spread should contract, not widen, right?
Well, but it's risk now. The whole credit market is super risky now.
Yeah, but it's also about credit. You should think. I like to think about credit spread as volatility, as VIX. They contract and they widen when shit hit the fan, when there is
Mhm.
hedging taking place, for example. So when you see a spike in the credit spread, this is telling you, listen, there is a stress in the credit market
Yeah, yeah.
related maybe to growth. It could also be possible that we see stress in the credit market related to growth situation because a lot of companies can't refinance.
Hmm.
Another way to think about it, it's because of rising interest rates, because the
Yeah,
the
I was
cost
about to
of
say the yeah, if the companies have to refinance at higher rates, then it's going to be worse for the whole the financing cycles and structures and so on.
so there's two ways to think about it. I like to think of credit spread as a much cleaner indicator to look at growth in the system.
Hmm.
And if I have a contracting uh, credit spreads, it's like economy is doing fine, but right now we have rising credit spreads, so the trend is going up. One way to look at this is the HYG LQD spread. So you take junk, which is the HYG ticker, and the LQD, which is investment grade. If the
Hmm.
trend is going up or down, you can determine if it's contracting or widening. And
So if it's moving towards the high yields, then it's more risk on, and if it's moving toward the liquid, the LQD,
investment
it's a
grade,
risk off contraction.
risk of contraction. So what we are trying now to do is just to look at these models, just to look at these indicators and try to understand what's going on really beneath the surface. What's the
Mm.
skew doing? Like fixed strike skew? Are we seeing rising volatility per strike, or are we seeing contracting volatility per strike and the overall VIX index is just trading higher based on a curvature
Hmm.
type of, or maybe it could be also demand for VIX calls, but there is no demand for puts. This also could be possible, demand for VIX calls, pushing VIX higher. Meanwhile, there is no demand for puts on the S&P 500. This is why the skew could be lower or flat. Could be also possible. This is why monitoring the situation or monitoring these indicators on a daily basis, it's very important.
You know the memes about monitoring the situation,
The $2 portfolio.
but monitoring the situation, sitting here monitoring the situation.
Exactly. Yeah,
Yeah,
so this is what you have to do, man.
I've got to monitor the situation.
I
Well, yeah.
also, so I also like to look at the dollar. The dollar is still holding, even with the peace news and the ceasefire news.
Mm,
It's not breaking down. It's still holding. It's the upper range.
not
And if
buying
the
it yet.
situation, yeah, if the situation gets worse, trust me, you will see the dollar breaking out this range.
Hmm.
And everyone is not enough long dollar. So there will be a rush into the dollar because of the narrative we had last year. A lot of
Yeah,
people
even
talking the
down.
dollar.
Hmm.
Exactly. And a lot of short covering has to take place. So I could see 105 on the dollar easily if we see more escalation. And here's the risk. If we get more escalation, or if Trump is only buying time to get his troops into the Middle East,
Yeah, de-escalating over this weekend to escalate next weekend when these
exactly.
5,000 Marines are there or something.
Now imagine what's going to happen to markets.
Yeah. They
All
they
of
they will
this,
rally into end of week, and then they will price it like, oh, we have a peace deal, there's ceasefire talks and whatnot. They'll be optimistic, and then there was going to be a sharp repricing if Trump escalates again.
and this repricing could happen in two sessions. Again, if you
Yeah,
remember
yeah, yeah,
Liberation Day,
absolutely.
three sessions, 10% down.
Yeah, I also always like if you look at the markets, always the good news, the optimistic pricing is what the market reflects. And then if shit hits the fan, there's going to be a super quick repricing, and yeah, then we will see a trend established. But in the short term, it's typically okay, good news get priced in and bad news get ignored. But then once something really bad happens, then the good news get priced out rapidly. So I think that's super possible. Yeah.
Totally agree. If you remember back in March 2025, we had a webinar with Andrew Radar, the couple guys, and I used to say in the webinar, I said it's easier for the VIX to go from 15 to 30, but it's gonna be very, very, very tough to go from 30 to 60, you know? So basically, because now you could imagine as the market is fully hedged at 30 VIX.
Hmm.
Now you need really, really bad news or a really bad macro catalyst to trigger a deleveraging event because the hedging took place already.
Yeah, yeah. People, the
Like
VIX is so high. There's so much like demand for puts and calls, of course, but for volatility hedges, that's why the
exactly.
volatility is so expensive. And yeah.
Not only vol is expensive, but if you look also at sector rotation, we have been buying XLP. The market have been buying XLP. It's one of the best performer this year as a defensive sector. Sector rotation told you also as well, listen, we had the defensive rotation. So once shit hit
Mm,
the fan, what do you think is going to happen? Look at the XLY XLP spread. We have been topping since January 2026 and moving lower, which reflects a demand for defensive
yeah.
rotation by many money managers and asset managers. So the last episode, after all these repricing, after all this dispersion, it's going to be a tail event, a flash crash, call it whatever you want, a sharp repricing in equities and risk, where we could see SPY losing 10% over 3 days.
Hmm.
And everyone will ask themselves, what the fuck happened? We don't know what's going on. All these people on Bloomberg, all the guys gonna sit
Yeah.
down and say, what's
Nobody
going
could have
on? We
seen
don't
it
know.
coming.
Nobody could have seen this coming. Meanwhile, JP Morgan is making money based on their quant models, and these HFTs companies are
Yeah.
making the spread. And if you have positioned early, you survived. It's not about making money, it's about survival.
Yeah.
Because I have a balanced portfolio. I think you also have a balanced
Yeah,
portfolio.
I balance it pretty well, I think.
Yeah.
Like I have
So
I had my high conviction position for long, which I protected now, got myself the puts, like how it works, protecting, keeping the upside open if everything is good, but protecting the downside with leaving some room to breathe, of course. But then also, yeah, the downside exposure. If shit hits the fan, trying to find the place where you get the maximum return or the maximum protection if everything goes bad. So yeah, it's fairly balanced, I'd say.
we are in KIE puts. I'm short Nvidia.
Yep.
Um, I yeah, basically that's it, and I'm hedged with the other positions. So if shit hit the fan, I have exposure to tech, and I'm short insurance. So if credit spreads rise, insurance will get completely destroyed. But here's a question for you, T. Do you think that the market will come back if we have a flash crash like the market did back in 2025? Or what's
So,
your view on it? Are you going to be a buyer of the dip, like 10% lower in the S&P 500?
I mean, so the thing we were talking about, oh, everything looks super similar to 2025. And if you come from that perspective, then you would say, oh, we get a big crash, let's go long. But I think the situation is completely different. I think the tail risk, like the tariffs, yes, they're bad. They were bad in 2025, and even the worst case scenario would have been bad for the stock market and the global economy. But the worst case scenario now is a lot worse. And the worst case scenario now is something that the markets are not going to recover from. So I believe that if shit hits the fan, of course it depends what happens. But if Taiwan is invaded by China or if Trump nukes Iran or whatever, I think that's an event that the market will not recover that easily from. So therefore, I would rather look for a down year this year than for an up year.
Okay. Yeah, beautiful. Well said. For me, uh, I think that I tend to think the same, only because of liquidity conditions that are getting
Mm,
worse.
yeah.
And if you remember, after Liberation Day, we made a podcast, which is the second one of this channel. It's uploaded on this channel. I said we see a turn up in the credit cycle. Liquidity is coming into the market. So I think it's going to be positive for risk assets. This is why we saw Bitcoin breaking into new all-time high territories. We saw
Yeah.
XLF financials recovering. I don't see it right now. I tend to see the opposite. If we crash, we might maybe we are not gonna come back, man. It's gonna be over.
Not bad.
We are not back. It's gonna be so over.
Yeah.
And it might be also this episode where retail investors get in, try to buy the market, and they will be cooked. Because
Hmm.
if you remember back in 2025, retail investors outperformed basically Wall Street in that
And also retail investors were like a huge force in this like move upward. Everybody was like every dip was getting bought and the I think yeah it was always like new retail volumes and all that stuff. And they will try to do the same now, but it
but
might
with
not
all
work
these
out.
conditions, with credit, liquidity,
Hmm.
job market weakening, I don't think they will survive this time. We will see. This is why just balance the portfolio.
Yeah, yeah,
Just,
yeah.
just.
It is
I was talking.
yeah,
Go
good
ahead.
time
Go
to get
ahead.
balanced.
I just had a meeting with a client, and I was telling them I just rebalanced the portfolio just to figure out that the rebalancing need to be rebalanced again.
Yeah, yeah.
This is how it feels every day.
Yeah, man. You go into the weekend, then you say, okay, I have great balance. All these scenarios are covered, and then Trump pulls some shit out of his ass, and then you get a new scenario and that you don't have covered yet, and then you have to rebalance again. And then
Exactly.
I
Rebalance.
remember over this weekend, you're sitting on Hyperliquid, looking at the fucking 24/7 crypto futures and that shit. And then, yeah. And then on the Monday morning, something completely new happens, Trump tacos, and oh man, it's
We had over the weekend, we have a problem with one of the portfolios we manage. And there was an uncovered position that was very like we couldn't sleep. And basically on Monday,
no
problem
problem
solved,
at
man.
all.
And we
Man,
sat
oh
there
man.
thinking about synthetics and risk reversals and maybe selling the money calls or puts and how to engineer a way out of the position without taking a big
Mhm.
loss on it. And all of a sudden, Trump came on Monday,
Turned
pulling
out to
shit
be a
out of
good
his
trade.
ass.
Take the money.
Yeah, exactly,
It's
man.
it's
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 crazy.
it's fucked. Yeah.
Same. Remember this, rebalancing the portfolio just to figure out that the rebalancing need to be rebalanced again.
Yeah, I mean, so I think with that being said, it was a quick little sum up, quick little shot in the dark, what the fuck is going on, and I think we'll see each other at the next one.